The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. It's September 19th, 2014. I'm Logan Burgess. To my right here is Cody Bills. We once again saw weakness out of the grains. Let's take a look at the iPad and see where we closed out today's session. We had new crop corn down 6.5 cents. Beans were down 13 3/4. We had Chicago wheat continuing lower, down 14.5 cents. Really not a lot of new information to talk about in this grain market. The fundamentals that have been driving this market lower for the last month or two continued in today's action. And as we've talked about a lot here on GrainTV, looking at these fundamentals, there is still downside risk in the grain market. Wouldn't be surprised if we saw some follow through next week as well. Today we did want to take a look though at the cash market in particular. Here at Grain Hedge, we collect about 4,000 elevator bids each day, and we take a look at those at the end of the week to see what kind of trends we're observing. Certainly saw a lot of volatility there in the soybean market.
Absolutely. It's pretty ugly in the futures market, but you know what? We also saw losses in terms of basis on average across the U.S. We saw for corn down 2 3/4 cents on average across the U.S. for spot corn basis. For soybeans, that's where we saw the biggest move here, on average down 62 cents across the U.S. What we're really seeing is that convergence between old crop prices and new crop prices, and what you're seeing is that premium of old crop. Soybean plants were the major declining basis contributors here to this decline. We saw soybean plants down 108 cents and 3/4. Bottom line here is that it looks as though the supplies at these facilities are being locked in to carry them into the new crop, and we're seeing a lot of this huge premium. We've seen basis plus 400 off of that new crop futures contract. Now we're seeing some of that premium being sucked right out of it, and this week it was just a huge decline. We haven't seen, it was pretty unprecedented. We haven't seen this in quite a while.
Yeah, absolutely. Well, as we know right now, a lot of producers looking toward new crop deliveries. We're also collecting not only spot prices here in the office, but those new crop contracts actually going out a year. What kind of trends right now are we seeing, or where are some pockets of strength and weakness when looking at those new crop grain deliveries?
Well, it is kind of interesting. When this is actually a chart that we put in our cash commentary. This goes out to Grain Hedge customers every week, and you kind of highlights the changes of new crop basis here on a state-by-state level. You'll notice Missouri was an area where we saw a decline in basis, down 3.1 cents here on average when you're looking at soybean basis, down 2.6 cents here when you're looking at corn basis. But there are areas of strength. We actually saw Nebraska up 1 1/4 cents or 1.5 cents, in South Dakota up 4 2/10 here cents when you're looking at corn basis. So there's areas of regional strength and basis or regional weakness. It is kind of jockeying around. We have a great platform over here for you guys to be able to monitor the cash market in your area. You'll notice new crop basis is starting to move around here, and it's very important as a marketer, as a farmer, to find the best selling opportunities when you're in the cash market, because with futures prices declining, you need to be able to make the best out of every trucking opportunity. We have the tools to do that over here.
Yeah, absolutely. And as you said, Cody, we did see some harvest pressure enter specifically southern states, and obviously that's a trend that's going to continue here. Next week, it does look like harvest conditions should remain relatively favorable. And if you take a look at these slides here provided by Planalytics, the left side is showing the temperature outlook. The right side is showing the precipitation outlook between September 28th and into October 2nd. So as you can see here, it should remain relatively warm compared to average temperatures. Don't look for a frost freeze event to prop up prices. As you can see though, it may get a little wet here toward the end of the month. Wouldn't be surprised if we saw harvest slow down a bit as a result of that. We'll help keep you posted though on that here on GrainTV. We show the quotes here on the iPad at the beginning of each show, and that's a great tool that our our producers are using as they're entering the fields to be able to monitor their positions from the combine, place orders as they need to. But as always, they have somebody here at GrainHedge to call if they need. So if you want to take a look at that iPad app, you can also use it on your iPhone, your Android, or your tablet. Visit us over at grainhedge.com. Take a demo there on the left side. Or as always, call the office. The number here is 877-472-4607. Thanks a lot for tuning in here on a Friday. We'll see you back here on Monday.